In less than 1 hour, Nvidia CEO Jensen Huang takes the stage at CES for his closely watched keynote address. Wedbush's Dan Ives joins us now with what we might hear. It's good to see you. You are there, as one would expect you to be. What's he going to say today?
Look, I mean, there's only one godfather of AI, right? And it's Jensen. I think he's going to lay out specifically around robotics, autonomous. Look, this is the next chapter of AI that I think Jensen's going to talk about. And obviously, I think he's also going to hit on just the demand that he's seeing, and no one has a better vantage point. And Scott, I think really what it does, this kicks off the next sort of layer of the AI revolution when it comes to robotics, autonomous. And I think that's something that is not factored into Nvidia stock, and I don't think it's factored in to a lot of these other tech names, Qualcomm among others.
So he's ready to move on, you think, to AI 2.0, if you will, where we move past all of the talk specifically about that company's chips and about how they can better be utilized in the areas that you're talking about?
Yeah, I think this is really him planting the flag, showing that Nvidia, it's not just about chips, the 12-to-1 demand that we see, and obviously fueling the AI revolution. It's showing that they're going to be end-to-end when it comes to robotics. They're going to be such a huge player when it comes to autonomous. And like we've talked about, like for Tesla, this is the year of autonomous. It's the year of robotics. And I think it all starts with Jensen because no one has a better vantage point. And I think what he lays out here is really going to dictate strategically what we see on the consumer AI revolution that hasn't even started yet.
Now, why has the stock been a sideways trader of late if everything is so bullish from even here forward?
Yeah, I think to some extent, I think it's investors thinking that, you know, numbers will beat the street, but not by a lot. What's the excitement? You know, has it all sort of been in the rearview mirror? Scott, I think this is a $250 stock. Like, to me, the demand and what they're going to show in their next quarter, we talk about 12-to-1 demand to supply. When you think about the autonomous and robotics revolution, what that's going to mean to Nvidia, I think that alone is going to add $40 to $50 a share. And I think this is one where investors, they're kind of yawning at what Nvidia stock's doing right here. And I think we sit here 6-9 months from now, I think it's a table pounder opportunity to own Nvidia, to own Microsoft, to obviously to own names like Oracle as well.
Well, hold on 1 second, because I'll get to some of these other names, but you raise an interesting question, or maybe a problem in some respects. How high is the bar now? And is the bar now viewed to be increasingly high, arguably to the point where they can't meet whatever expectations we now have for this company, and that ultimately is going to cause some sort of correction even further in the stock?
Yeah, it's a great point. I think at 225, 230, maybe I'd say that. Here, I actually disagree. I think investors are underestimating what the demand's going to look like for Nvidia in terms of next year. I think street numbers are underestimated by 15, 20%. Next 12 to 18 months. And I think it's the ripple effect. For every dollar spent on a Nvidia chip, there's an $8 to $10 multiplier across the rest of tech. That's why we've said, I mean, it's top of the third inning in a 9-inning game, 1 out, in terms of where we say. That's why this tech bull market's going to continue to play out. It all starts with the godfather right now.
There are product launches. And then there are narrative tectonics. Jensen Huang didn't just launch faster silicon. He put stakes in the ground. Rubin is not a faster GPU in isolation, it's an extreme co-designed platform, Vera CPU plus Rubin GPUs plus Spectrum-X networking plus software layer, meant to drive reasoning at scale and, crucially, to make AI act in the world, robots, cars, and factories. That's what people mean when they say, physical AI. It's ChatGPT-level reasoning, married to sensors and motors that actually do things. Why does that matter? Because the world of AI has mostly been a cloud and chat story, datasets, models, and servers. If AI starts to physically interact with the world at scale, you go from software-driven monetization to hardware plus software plus service ecosystems that buy chips, racks, networking, simulation capacity, and that opens up multiple revenue streams for companies that own the platform. Which brings us to Wall Street's dramatic question: can Nvidia ride this wave like a surfer on a tsunami? And can that justify Dan Ives' headline-grabbing call for Nvidia by the end of 2026? The Rubin reveal reads like a chess move, 6 chip types working together as a pre-integrated rack. Imagine instead of selling a single engine, Nvidia sells the whole car, the drivetrain, and the navigation system, and supplies the mechanics who install it. Rubin claims major inference cost improvements, talk of drastic reductions in tokens per dollar, and specialized pieces, Avera CPU, Rubin GPUs, Spectrum X photonics. That's why people are calling it a platform more than a chip. Production ready, shipping later this year, that's the official line, and production means the transition from demo to deployable kit for hyperscalers, cloud partners, and big systems integrators. If Blackwell was a smartphone that let you run cool apps, Rubin is the cloud plus phone plus nationwide 5G network plus regional edge centers all tuned to deliver perfect low-latency experiences to robotaxi fleets. Same user experience? No, it's a whole different business model. Physical AI, what it actually is, and why it's harder and bigger than you think. Physical AI equals reasoning models plus sensors plus actuators. Put simply, teaching a machine not only to say the right words but to do the right thing in a messy, uncertain, wet, sunny, icy, human-filled world. The technical jump is enormous. Perception must be fused with causal reasoning, safety constraints, and real-time decision-making. But the prize is massive: factories that heal themselves, robotaxi fleets that scale, delivery drones that navigate dense cities, and autonomous robots that do dangerous or dull work. Imagine teaching a toddler to prepare a sandwich versus teaching it to do your taxes. The sandwich is messy and physical, the taxes are abstract and tidy. From an engineering standpoint, shipping the sandwich maker into thousands of diners is orders of magnitude more complicated, but the economic upside of successfully automating the sandwich line? Huge. That's physical AI in a nutshell. Why Wall Street hears thunder, Dan Ives and the 12-to-1 demand story. Enter Dan Ives, the Wedbush bull who has been shouting from the rooftops that demand massively exceeds supply for Nvidia's chips. The shorthand you'll hear on TV is a jaw-dropping 12-to-1 demand-to-supply ratio for Nvidia's key chips, meaning for every chip available, there are a dozen pieces of work hungry to run on it. That imbalance creates a multi-quarter or multi-year backlog, hyperscalers pouring capex into instances, cloud providers adding capacity, and verticals like auto, robotics, and telco building out tailored stacks. Dan Ives' $250 target isn't a random tweet, it's anchored on a few claims. 1. Nvidia's unique platform position across training, inference, and edge. 2. The enormous revenue leverage from multi-tier sales, hardware plus software plus services plus cloud consumption. And 3. A multiplier effect where every dollar spent on Nvidia chips ripples into other tech spending. He sees earnings power rising and consensus underestimating that increase, which is how you get from today's price to a much hotter future fair value. Okay, now let's get crunchy but stay fun. Dan Ives' thesis is basically, if Nvidia's addressable market grows, training plus inference plus physical AI deployments plus networking plus software, and if Nvidia preserves high margins on GPUs and systems, the company's EPS, earnings per share, trajectory could surprise to the upside. Multiply that EPS by a still generous growth multiple, and revenue power justifies a much higher stock price. The multiplier effect: why every Nvidia dollar sparks more spending. This is Dan Ives' favorite microstory. An Nvidia chip sale doesn't just show up as a single line item in someone's budget, it creates demand for memory, switches, specialized software, data center real estate, integration services, and downstream customer deployments. He's talked about an 8-10x ripple across the ecosystem for every dollar of Nvidia hardware spend. In layman's terms, selling one rack ends up filling carts across the entire supply chain. That ripple is part of the earnings power story. Nvidia pockets the hardware margin and then benefits indirectly as its partners scale. Buy a smartphone, and suddenly app developers, accessory makers, cloud services, and ad networks all get a revenue bump. Multiply that by hyperscalers and robot fleets, and the economic ecosystem changes. If you watched Nvidia in the last few months, you might be scratching your head, with all that hype, why isn't it a non-stop moon mission? Several answers, and none of them are showstoppers. The bar is stratospheric. Expectations are already baked in. When investors expect monster earnings every quarter, anything short of a blowout looks like a miss. That raises the volatility and keeps the price range-bound until truly visible upside lands. That's classic sell the news psychology dressed in hedge fund apparel. Rotation and breadth. The AI theme broadened. Memory makers, optics providers, and other chip makers began to see their own re-ratings. That siphons marginal capital away from Nvidia into the rest of the party. When people rebalance, big winners can be a source of funds for the next hot sub-theme. Near-term metrics versus long-term narrative. Rubin and physical AI are long-run revenue stories. But markets trade on quarterly receipts. If investors want immediate earnings, they'll wait for the next report that proves the thesis in black and white. Jensen's production announcement reduces uncertainty, but it doesn't teleport revenue into the next quarter. So the sideways tape is less a rejection of the thesis and more a digestion phase, investors demanding receipts for the dream. Note this as well. Even with Nvidia, there is something more you need. Fear not, I am the first and the last. Revelation 1 verse 17 is a call to trust in Jesus and fear not. If any man worship the beast and his image, and receive his mark in his forehead, or in his hand, the same shall drink of the wrath of God, which is poured out without mixture into the sea of his indignation, and he shall be tormented with fire and brimstone in the presence of the holy angels, and in the presence of the Lamb. Revelation 14 verses 9 to 10. Want more information about this? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more that I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly motivate me to continue bringing to you relevant information. Do not miss out on my future videos. All I am imploring you for is your subscription. Thanks for joining us today. Your support means so a lot to us. Do share this video to inform someone who may benefit. Please do watch the next video, subscribe to the channel and share your insights about today's video. Wish you God's mercy and grace. Now is the time to prepare for eternity. See you in the next video by the mighty of Jesus our Lord and Savior.